their live stream. Put all of your questions down below, anything you want to talk about today. I specifically want to start with real estate. I think something's changing in the market finally. Like for months, I've been listening to the pulse. I've been, talking to agents, talking to wholesalers, watching the sales data here in Ontario where I live, as well as like in London specifically, as well as in Florida and in several other markets I've been watching. And it's taken time. There's been a lot of cash buyers that continue to buy, but old rate holds are expiring finally. New rate holds are starting to sink in. People are realizing that they can't qualify. They had a 4% locked in rate for 150 days. That's now expired. A lot of people are like, oh crap. Now when I go to get a pre-approved, it was $1 million pre-approval before. Now it's 550 because you're qualifying at a much higher rate. And so a lot of people are like, wow, it's much worse than what it was before. I can't afford to buy $1 million house. Now I have to buy a $550,000 house. And even if you can afford it, even if you could get approved, even if you had the income to service the debt and get qualified, you can't even afford the payments. In a lot of major cities right now, it's cheaper to rent than it is to buy, which is why rents are climbing significantly. We're seeing a 25% rip up in the price of rent. Still not enough, nowhere near enough to cover the fact that the interest expense related to a home equity line of credit or a mortgage right now is more than 100% increase. So if your mortgage expense for interest carrying costs was $2,000 a month or $3,000 a month on that said property, it's now $5,000 or $6,000 a month, that same property. Rents have not come up enough to make it make sense. Hence why prices are falling in real estate. So big time falling. I'm talking from the peaks to now, in some areas, a third of the value of real estate wiped out. $1 million houses selling for $650, $700. That's the biggest drop we've had in decades. So I don't know if it's not making enough news coverage or I don't know what's going on, but everything on MLS, you can drop in 15, 20% discount and 1 in 10 properties is going to accept that discount. So I'm starting to buy. I've been dollar cost averaging it. I've been talking about buying. I'm putting my money where my mouth is, and I'm starting to buy property. I believe that we will get inflation under control, that rates will come down because the Fed will collapse the economy and drive the economy into a recession in the coming 12 to 18 months. So I am very, very short-term neutral, long-term bullish, short-term I'm a little bit bearish. I think it's going to get a little bit better. I don't know where the bottom is, but I'm going to continue to buy deals that make a lot of sense. I had 2 deals. I've been putting out 5-10 offers a day, but I had 2 deals in Florida right now. If anyone has cash and you want to buy property in Florida, hit me up because I can assign you deals that are coming across my desk. I'm talking about beautiful properties like big pool houses in like West Palm Beach, near the beach. It would do really well on Airbnb, do a couple $100 a night. You could easily crank out like 70, 80, 90 grand a year in top line on Airbnb for properties that are selling for like 400,000, 390,000 that would have normally sold for 500,000. So now people are taking offers off market. Wholesalers can't get rid of properties. They're sitting. You can negotiate 6-figure discounts on the purchase of assets right now. So it's great. It's wiping out all of the appreciation that Florida saw through COVID. There's some crazy, I will say on the supply demand side, Florida has an insane supply shortage and a lot of people are moving to Florida. It's in the 4 cities in Florida are in the top 10 hottest immigration and migration from blue states to red. People are moving to Florida. So it's in the top 4 of the top 10 cities are in Florida. So I'm bullish on Florida. That's why rents are spiking there. Miami's crazy. Tampa's also crazy. It's just, again, with the hurricane that just went through there's going to be a lot of opportunity. But for people not people who are unaffected by the hurricane, but that might be afraid of a new one coming on, or just like saw the devastation, were like, I'm out, cash out. On top of that, people who are on variable rate, adjustable rate mortgages are like, hey, I'm out. A lot of opportunity for those people who can get in there now. Maybe you won't have a ton of cash flow right now because you're, again, buying at a higher interest rate. But as long as your cash flow positive and you can weather this said recession, rates will come back down. We cannot sustain 6, 7, 8, 9, 10% interest for a long period of time with the debt the way that it is now. Our current system would collapse. It just is not sustainable. We will not have 10 years of rates like this. It will come back down. They will crash the economy, and the Fed will pivot. From right now, they're very hawkish. They're like, hey, inflation's serious. We're going to raise rates. It's going to be painful. They keep saying that until the jobs data comes out and Americans are suffering and all around the world people are suffering. And then they'll step in and they'll still stimulate. Just like what we saw this week with what was going on in the UK, right? The UK came out and said something crazy. They're basically the equivalent of their Fed came out and said, we are going to buy as many bonds as is necessary at any price, any amount to satiate the economy, because there was basically Deutsche Bank and Credit Suisse and a third one there. There's almost a run on the banks in the UK. And I don't know if you guys were watching, but like it was trending #1 on Twitter. We were talking about full currency collapse. Like it was on the precipice of a 2008, coupled with, and I guess propelled at least in part by crazy inflation and an energy crisis, right? So they're in a rock and a hard place over there, and they're stimulating. And that might be a sign that the Fed in the US could turn on a dime and stimulate as well. And some of the verbiage, which is why the economy, if you've been looking, what was it? Friday and Monday? Or I guess Monday and Tuesday this week anyway. Monday and Tuesday this week, the NASDAQ and the S&P 500 ripped up 6% in 2 days. That's insane. We had trillions of growth, and now it started to come down a little bit today. We ended, I think, on positive. Unfortunately, I was hoping for a bit more down. I am still short. I am still bearish until I see the Fed turn, until I see the language of the Fed switch from bearish talk, hawk talk, rates rising, inflation is under normal control, to then saying, hey, this other variable of like the average American suffering is now important to us. When we see that pivot come, that'll be the time we want to buy. So I'm throwing this out to everyone who's watching this. If you have cash and you're like, I don't know where to find properties at 50 cents on the dollar. Yesterday, I got a call from a wholesaler for a beautiful canal house in Palm County. It was like a 5-minute trip to the beach, far enough away that you're safe from hurricanes, but close enough to the beach you could Airbnb, do really well. Beautiful pool house, 4-bed, 3-bath, I believe, for $299,000. This house would have been $550,000. We're talking almost a 50% discount. Needed a little bit of cosmetic, but like I didn't have the cash to close in 2 weeks. I did, but I didn't have it in USD, and I just didn't want to pull the trigger. In hindsight, I probably could have sold some of my S&P 500. I would have had that in USD currency, and then I could have closed on it, but I didn't. I need more people on a list who are like, I'm ready to buy if a deal like that comes along. Like, no questions asked. We have 20 minutes to respond. And you literally sign the contract, wire the money, and in 2 weeks, the title company closes. I need more of those people on my list because those deals are going to come up, and more of those deals are going to come across my desk. And I'm not going to be able to close on all of them for whatever capacity restraint reason. I will also leave a hint here that I'm working on a new collaboration, a merger of sorts, to have in-house a property management company. And I'll leave it at that. More to come on that, more exciting news on that coming. So that will be a piece to the lifestyle business. And I think just in general, I think in-housing your property management gives you some distinct advantages. And I also just think it's a business that is very synergetic with what I already do. I know a lot of investors who are looking for good quality management, so we could offer that, as well as I know a lot of landlords who want to just do the re-rental strategy. And in general, I like the business model where in Miami, let's say, like pick Miami, pick LA, we'll say Miami. In Miami, you can find a $5 million house that in this market would have quick math, like a $30,000 a month carry cost. You can go rent that house right now for $9,000 a month. If you bought it, it'd be $30,000 a month just to carry it. And that's you owning that mansion, right? Or that nice house. But you can go rent it for $8,000 or $9,000. And then on Airbnb, that property will, if you do it properly and you follow the right protocols and you build great systems, you can have very little of your own invested time and have a good, solid, moving, systematized business that could take that property, and if you do it right, you can make $20,000, $30,000 a month top line and basically clear $10,000, $15,000 a month on a property that you're renting with an insane ROI. So I want to get into that space, into the Airbnb arbitrage space as well. And I found 2 guys who are doing it, and I think that they're a great matchup. And so I'm excited to talk about that more, but I'll wait until all the I's are dotted and the T's are crossed and we're further along. But that's something I'm also excited about. It's a business and a space that I want to invest in further. You guys know I have the wholesale piece. I continue to wholesale. I also do the lending piece. So if you guys need a deal funded, I do have a set of capital aside for that in Canada. In the US, I don't have anything right now. In Canadian currency, I can fund deals if needed. It's expensive. I'm going through currently a foreclosure on a property that I lent on. So that'll be interesting. I get to relist that property and recapture my first mortgage on it. I was careful with what I lent, so I think I'll be okay. But it'll be an interesting process to actually go have the lawyer go to court and take. I've had to threaten foreclosure. I've gotten close a couple of times. I've never actually taken a property from someone. So this will be a first. Usually they come good before court and they clear up the debt or they sell the property, and you never have to take title and force the sale. In which case I will take title and sell the property. But anyway, excited for those things going into this recession. I want to come out with double the net worth that I went into this recession with. And I think I'm poised to do that by capitalizing on the things that I'm best at. And like Mike Rosehart has a great brand, but more importantly, I'm a good negotiator and I'm a workaholic. So, and I love it. It's not even work to me. Like literally I'm up at 2:00 in the morning last night, scrolling through like wholesale marketplace groups, Craigslist, Kijiji, scraping the MLS for stuff that's distressed. Got people looking into things, got offers going out. This is what I do for fun, right? I wish I had an unlimited base of capital and I could just take all these deals down. Even if I had an unlimited base of capital, I don't have I'm working on this, but I don't have the team to walk behind me yet and working on this. But if I were to take down like 10 properties at once, I wouldn't have a team to fix them all up, get them all staged, get them all on Airbnb or rented, depending on which strategy you're going to go with. I like the short-term rental STR strategy better, only because you have full control. So if they damage your unit, it's a profit center, right? Like you literally can get more back through damage. That's like the worst case scenario. I was like, oh my God, what if they damage your property? It's like, that's awesome. That's the profit center. We have a credit card on file and we have a damage deposit. Like that's what we're looking for. We get brand new furniture in the unit and they cover it. So if you do your job right, you document well, and you have good systems to document the before and after, you can definitely go after the damages. And so that's something that I think is exciting about STR versus long-term rental, especially in Ontario, where you're stuck at a crappy rate. Inflation and rent control, they don't go hand in hand, right? Like rent control is frozen, your expenses are rising. Why would you want to lock down a lease? Why would you want long-term tenants in general be getting a 2% increase a year? With Airbnb, if the market pivots and there's a 20% jump in the average cost of housing, boom, you're good to go. You just increased your nightly rate from $100 to $120. Add $20 a night on, boom, you just made like an extra $600 a month. Done, easy, passed on the cost. Oh, you want it vacant tomorrow? No problem. You could block the calendar off. The whole building could be vacant. You have full control of that asset, which is really, really nice versus a long-term rental. You get a bad tenant or a bad issue, you can cancel them. Done. So easy. You're just catering to a different style, and I like that a lot more. It's a product of housing that I prefer. I like the monthly stays. I like not necessarily short term, but I like the medium term stays. I like someone who's coming to town for 3 months who isn't like has their whole life invested in this apartment or this unit, and you're like, it feels horrible to kick someone out who can't afford to pay. And in a recession, people won't be able to afford to pay. That's a reality, right? There will be people who will lose their job. There are a lot more layoffs and job cutbacks, hours cut back. All of that's coming. We're already starting to see the tip of that in the white collar space. And so this can be a very lucrative opportunity for those people who are going to work hard, who have capital. If you have cash right now, keep that cash. Cash is king, right? Yeah. Let's do some Q&A for a sec. Hey, how you doing? Are people still borrowing money through private lending? Yeah, of course they are. Now more than ever, because if you're getting from the bank at 7 or 8% with a 3-month discharge penalty when you break it, if you're flipping a property, your bank fees, if you annualize the cost to set up that mortgage and then pay the bank fees to break the mortgage after a year, if you go to the TD Bank or Bank of Montreal, for a mortgage, like a lender bank, you're going to end up paying like an annualized 7%, but then you're paying 3 months interest penalty and all the discharge fees. You may end up paying like 12% interest on a flip on a product that you have to go qualify with the bank and send all that documentation through. Instead, you could save that 100 hours, call a private lender, have the deal funded like lickety split, and pay them 15%. And your cost is not that far off because there's not any crazy mortgage breakout fees potentially. And it's just so easy. So yes, people are definitely going to private lenders now more than ever, I would say. I would always borrow for flips like 10% or whatever, like 8 to 10% all the time when I'm doing flips. It's way cheaper. It's easy. I reach out and say, hey, do you want to do like a low loan to value? The property's going to sell for 500. Would you put a mortgage on for 250? People are like, whoa, that's such a safe investment, like 100%. Yeah. So people are happy with a risk-free return of like 8 to 10. Now I can still get the 10%. People are happy with 10% typically. I still get 10% interest, and the bank cost is like 6 or 7 now. So my flipping cost like has gotten, I still pay around the same amount pretty much for my cost of funds to flip, but everyone else is paying way more. And which means that the price of everything has fallen. So prices are coming down, margins are getting fatter because you can negotiate bigger discounts, and prices haven't fallen in general as much as they have in the off market, in the distress market. That area is getting hit a lot harder, right? The properties that aren't perfect, those properties are selling for bigger discounts now than they were before in this super hot market. I have agents that like, I'll just throw them a lowball offer and they're like, no. And then 2 weeks later, they're like, hey, Mike, is that offer still on the table? I'm like, that's how I know we're in a bull market. Or I mean, a bear market. When we were in a bull market, I would leave an offer and they would just never call me back. They get so many calls. Now they're calling back like, hey, can you put something together? Like, we could probably get something done at like 20% off asking. That's a sign of the times. It's a good time. Are we at the bottom? I don't know. I continue to dollar cost average, which means I continue to buy properties and I nibble in. I'm not fully deployed into real estate. I'm hoping by end of next year, I'll have moved from, some of the other investments I'm in. I'm in a lot of lending right now, moving the lending investments into equity investments. Lending is really great on the way down because it's a fixed return. Market goes down, I make 15% of my money. As the market falls 30%, I can then get rid of the fixed 15% growth, boom, jump into the bottom of the equities and ride it back up, right? So I always think lending is the best in a flat market as well as in a declining market. But in a rising market, you want to be in equities. So that means real estate, crypto, stocks. Oh, my abs hurt. Oh, when I cough. I was doing some workouts with a buddy, and I have my own gym. So we were in the gym doing pull-ups, and I was doing, bench press, and oh, I'm sore. Took us to the gun show. Just fucking around. All right, next question. I know full well I'm not like super jacked. I don't work out much, but I am a natty. I'm naturally pretty fit. Next question was, hey Mike, is it worth it to sell property in the current market in Ontario in the aim of buying better properties? Generally, I would say right now is not a great time to sell. We may not be at the bottom yet. Okay, it could be good to sell only because there are still comps closing now that sold in May with a long closing that are helping be strong anchor comps for you to sell for a little bit higher than market. So you're able to actually convince people to pay a little bit more. So there's still a tail end of being able to sell right now. I have 2 more properties in London here that I'm planning to sell at some point in the next few months. One of them's almost done. I'm just waiting for it to get finished. Yeah, that's where I'm at right now. As far as in general, I don't know. For me personally, I feel like whenever I finished a property and it's really nice and it's the way I want it and I get everything right and I get great tenants in it, I'm always motivated to sell it. And the reason for that is there's an investor out there who will pay me top dollar for a clean turnkey asset that's cash flow positive. I have so many opportunities fly across my desk that it's hard for me to want to hold on. Like buying and holding real estate and the business of acquiring real estate are 2 separate things. And because my return on capital in this business where I turn and churn real estate and flip it and burr it, I need water. My throat's killing me. I cut the stream short soon. There's like dust down here or something from the heater. My throat's killing me, guys. I got the remnants of a cold mixed with I need some water. The buy and hold, I might have a down payment of 25%. So on an 8 cap property, we're looking at like 25% return. So I hold that property and make 25% return. As I pay down the mortgage, the return gets lower. I'll call it an average 20% return on my capital in equities. Hold it, buy and holding. When I churn real estate, so I buy that house for 200, renovate it for 100, it's now worth 600. I can take that property and I can make a 400% return. So the act of me just, like, every time I get a stabilized asset, I'm like, geez, I got 100 grand trapped in here. It's making 20%. That's great. I make 20 grand a year, whatever. Mortgage pay down. It feels terrible when I have these other opportunities screaming at me and being like, why are you holding this turnkey asset at 8 cap when you can go buy this other property that's a 12 cap that just needs a little bit of fixing and renovating and turning it around? And so I continue to sell my assets only because I keep seeing a new shiny, better deal that I can churn the capital into. So it's like if you buy it, I don't know, you buy a stock and the stock appreciates to closer to market value, and you see another stock that's undervalued, and you're like, oh, I should just sell these shares and buy this one because it's better, it's more of a discount compared to its internal, value, its internal net asset value. And so that's what it's like in real estate for me. And because I trade in real estate, that's the business I'm in. All I do is talk to people about off-market properties. I have a competitive advantage there. And so it's difficult. But for me, it makes sense to always sell, minus the effort to sell and the cost to sell. But yeah, and the tax obligation, and everything else. William says, evening, Mike. When looking at the U.S. corporate earnings, GDP, to your PE, it still feels like we're sky high. I struggle with trying to understand how far things could fall. William, you have to understand it from the perspective of, we live in a world now where there's so much debt and such an understanding or an expectation that inflation is going to be at 2 and 3%. And I think that we'll get back to that target. I think we will keep interest rates low. Perpetual growth is at like 3%. And so for that reason, I think that it's important to understand that because the average 10 or 20-year return is expected to be like 3 or 4%, a PE of like 10 is reasonable for most people. Like, oh, that's reasonable given inflation's low. We're in a unique period right now where treasury yields are crazy, bond yields are crazy high. All right, throat's killing me. It's a unique period of history. And so for that reason, I don't think we'll ever see a proper 2 or 3 PE like we used to see. Valuations are high when you look at it, generally speaking, sure. But right now, honestly, I'm looking at some companies and I'm like Intel, where it's like a 6 PE, or Facebook. Like, there's a lot of companies under 10 PE right now that are growth companies. They're huge monoliths that continue to grow, that have tons of potential to grow significantly. I see discounts. I see value all over the place right now in the market. I'm still short. I'm still technically short of my portfolio, but not very short. I'm closing out most of my shorts. I'm going to be neutral soon, which means I'm just sitting pretty much on cash. I'm not sitting on cash. I have contracts that are both long and short that cancel each other out. So I'm eating theta decay over time, which means I get like a 6 or 8% yield. But yes, I'm basically not in equities right now. There will be a time where I start dollar cost averaging or DCAing into the market soon. I think the QQQ at like 260, 255 is really attractive to me. I don't know where the bottom is. None of us do. It could rip down to 200, right? Like, who knows? But I think over the long term, we will continue to see growth. GDP grows over time. Economies grow over time. The expectation is the indexes will grow over a 10-year period significantly, right? But thank you, William, for the comment. Always great to see you coming in. So I think there is value in this market. Way more value than I saw in January, for sure. Como says, ever look into buying a controlling seat in a public company? That'd be crazy if you could, but get in under $10, $20 million company, buy 5%, put yourself on the board. I did look at that once. With a couple of friends, we looked at it was like basically a penny stock, but we looked at potentially getting someone on the board and us buying enough of it that we had a controlling interest. That company went to shit. So I'm glad we didn't buy a huge stake in it. I bought like $50,000 in shares and they went to like, I lost a large percentage of my net worth. At the time, a large percentage of my tax-free savings account in that investment. But yeah, there are definitely companies that publicly trade at like $10, $20 million valuation, and you can put like $1 million in to have like a 10% stake in the company, for sure. The problem is buying those large public companies, you're paying usually a premium to get them. So it's usually better to buy private companies. But yeah, it's a clout thing. That's pretty sweet, right? William says, also China housing big 4 cities, like there are 4 times the value of any other big city. It feels crazy. True. Mark says, question, what would you do with $40,000 as a U.S. citizen looking to buy your first property in Florida? 40K isn't a ton of money. I would go find a seller finance deal. Now more than ever, you'll be able to find something. You might have to pay full market price for the property, which sucks. But if you can buy something that cash flows positive, especially something that doesn't look very nice, like maybe a shitty duplex, it doesn't have a pool or anything nice, but you could fix it up. In Florida, you can find something for like 200 grand and say, hey, I'll give you 20% down, you finance the rest. Maybe they'll even seller finance you at like 4%, which case you get a cheaper mortgage than what the bank's offering right now. It's crazy. Some seller financing deals right now are cheaper than bank finance deals. So they're like gold right now because people still like in their mind are like, oh, 5%, that's a reasonable rate of return. But the bank's like 7 in many cases for Canadians investing in the US. If you're in the US, you know that in general, there are way more lender options than in Canada and way more flexibility too. As a Canadian, I can easily find lenders that'll like lend at like 7% all day. So it's, you put 25, 30% down, boom, you're good to go. It's super easy to buy in Florida. Naman says, hey, Mike, these properties for $250,000 in Florida, does it require purchase all in cash? Yes, usually you have to close in cash because it's too fast to finance it. But after you close, you go right away and you put a mortgage on if you want. So it's a period of like 6 weeks where you'd have to be in cash. But yeah, then you can refinance most of that out. If you do it right, you can finance all of it out within a year. So you'd have a property that has no one's money in it. The bank effectively financed 100% of it because the new value at 75% loan to value is more than the purchase price. So they've appraised it, appraises it at a higher amount than you bought it for, and they'll loan 75% on that value. And that value happens, that new mortgage value happens to be more than you paid to purchase it, plus renos. That's the goal, is basically owning real estate for none of your own money. The bank's funded the whole deal. That's when we talk about zero down deals. They usually don't look at like zero down on purchase date. You have to usually come up with the cash, but then if you can put some sweat equity into it, or you can buy it at a smart enough discount, then you're looking and feeling really clever when you get that refi with no money in. What license is required to be a private lender that collects and lends out the money to investors? No license at all. You can lend out any of your own money to anyone you want, anytime you want, and the lawyer will literally put on the mortgage for you, so there's nothing you need to do. Your extent is like literally signing a 2-page commitment. Get a commitment template, you send them a commitment, they sign the commitment, you're legally bound, collect a deposit, send that commitment off to the lawyer funds it, registers on title, the loan is done. Easy as that. So you can be a private lender of your own capital. You need a mortgage license to syndicate deals together. So if I said Billy Bob Joe has 100 grand and Aunt Thelma needs 100 grand for her house, and I connect the two and I put that deal together, that's being a mortgage broker. You need a mortgage license. Big no to take Aunt Bobby Joe, I forget the names, I made them up, Bobby Joe's money and give it to Aunt Thelma or whatever. You can't do that. Now, legally speaking, you could take your aunt's money, borrow it from her against your assets. You guys have your own transaction. And now you take 100 grand of your own money and you lend it out. And in theory, you could borrow one at like a bank would at 5% and lend it out at 10 and make a 5% spread. That would be legal. You cannot raise capital from groups of investors and then go and lend that capital out without a mortgage license. That is a big no-no. You cannot raise capital. So careful what you do. With your own money, totally. You're just a private individual, lots of money you want to lend out, go for it. Do your private lending. It's a great business. I think it's an active business, really, because you're doing your own, you could do your own appraisals, your own consultation fees. You can build in whole consulting packages where you mentor them through the coaching. And that's part of the program. And that's now active. All that's active income. The appraisals, the site visits, the consulting, any lender fee, review fees, all of that can be active income. And so you can structure it so it's like 14% active tax rate instead of 55% passive income tax. It can be an active business if you're doing it primarily. It's one of my main active businesses that I do. And I get tax preferential treatment for it. Really appreciate you sharing your thoughts. Hey, no problem. Thanks, Tristan. Mark says, short-term rentals, what is your opinion on the Airbnb arbitrage space where you rent instead of buy and sublet as an Airbnb? I think there's a ton of opportunity if you can find the right listings in the right markets. It makes a lot of sense, especially major metropolitans. Hugely profitable if done right. You get in there, you get the wrong furniture, you don't know what you're doing, you don't have dynamic pricing, you don't have the systems, you don't have the people in place, you don't give a quality experience, you're not good at the luck stuff, you can get crushed. Sit vacant, end up having a $10,000 a month mortgage rent obligation every month that's crushing you. So like anything, it's a business, and some businesses go under if you don't perform well. So it can be hugely profitable. It can also be a huge money suck if you suck. What are your thoughts on investing in real estate from out of state? I live in Quebec, looking to invest in the US. You can definitely do it, 100%. You just got to set up good systems and to rely on good people. Cameras are important. Having a realtor locally that can check in, or a property manager that can check in on a contractor, and having those cross checks and balances is important. People are not trustworthy in many cases. Who would you usually lend to? Yeah, on the personal network. Like if you're looking, it depends, right? Like I borrow a 10% all day, right? So there are people in the network that are like super qualified borrowers. Just depends like what level of risk you're willing to take. For me, I like to know the person. I like to be entrenched in their social media and everything else. So that's something that I find important when I'm lending. The only time I didn't do that, I got burned. So Chris says, hi Mike, we are clearing our land in Perry Sound, hoping to build in 2023 and then hold on to it for a year and sell in 2024. I'm scared it will sit. Land right now, oof. Building costs are all-time highs. Real estate values are all-time lows for the year. Not a great combination when cost to build is still high, supply chain issues, but the ARV isn't there. So I'm not a big fan of developing right now. Oh. Here it says, how do you get as many personal unsecured lines of credit as possible? Go apply for them at every different bank all at once. PowerProf says, which countries are worth investing in the Caribbean? I have no idea. I like the Bahamas only because of the tax benefits associated with that. David says, what do you think interest rates will be in the first half of 2025? Geez, I think that, I don't know. 2025 is a long way off. Let's see how 2024, 2023 play out first and the rest of 2022. I think it's possible we keep cranking rates into 2023 and then we break everything in the spring and then we get in a situation where towards the end of 2023, the market is broken and we are in extreme pain and they begin lowering rates. And when they begin lowering rates, it's going to be euphoria in the markets. We're going to see a 30% pump in the stocks. Real estate's going to jump. Everything's going to do well. Yeah, I don't know. It might be the overcorrect and the lower rates, inflation will peak again and it'll be like a roller coaster. And it might go that way for some time, which could lead to a flat real estate market. Yeah. Sorry to hear about that, Chris. Simple hostage situation. Sorry to hear about that. Is the Bahamas still a goal? For sure. It's a challenge that there's a number of reasons why I still love Canada and I'm entrenched in Canada, and it's hard to leave everything we have here. I understand why everyone doesn't just pack up to the Bahamas because on paper, it's a no-brainer. 91 days a year. That's how long I have to live in the Bahamas to be a tax resident of the Bahamas. As long as I stay out of any other country, 6 months. So say 5 months in Canada, 4 months in the US, 3 months in the Bahamas. Done. I go back and forth between Miami and Bahamas twice a week if I wanted to. I could basically live in Miami while living in the Bahamas at the same time, right? Because they're so close. And there are no personal tax returns at all in the Bahamas. So that's pretty sweet. Where else can you file no tax return at all? Thoughts on investing? Be careful investing your student line of credit. Only in very, very safe, diversified investments. Just be careful. And if you're going to invest, make sure you buy a hedge, right? If you're going to buy the index, make sure you buy a put or you sell some calls on that equity position covered to protect you against downside. The worst thing that could happen is that line of credit, you have to go pay that back for whatever reason. You need the cash or liquidity, and we're not in a position where you can collect that. At least we have already taken a 30% shit on the year, so it's not a bad time to be buying in, but just be careful. Real estate's also very illiquid. It can take you 3, 4, 5 months to get cash when you want to get cash from a property. By the time you get it listed, prepared for sale, sold, and then 60 days to closing, typically look at 3, 4, 5 months to get liquid from real estate. So it's a very illiquid thing. Whereas the index is more liquid, 3 business days to settle, and you can have your cash in about 5 days. So they're different things, but both could be. I could see the argument if you had other liquidity from other places, putting some money in there and enjoying the difference. Alex says, what are your favorite markets to invest in 2023 for owner occupied? I like cottage country near Grand Bend and Lake Huron here in Canada. Beautiful, beautiful waters. It's a place I'd love to spend the summers for the rest of my life. In the winter, I gotta be in Florida, West Palm Beach, Sarasota, somewhere like that. I think I got all the questions here, but in your opinion, in order to buy real estate in Florida through a different model than seller financing, well, the more you have, the better. Ideally, you have enough cash to close the transaction. That's what they want to see. That's what you need to do. You can do it with less, for sure. There's no doubt. You can do seller financing. You can work with a private lender, put 10, 20% down. There are lenders who will work with you. It's just, yeah, for sure you could. There are people who are doing it. So find creative deals. Anyway, that's it. That's all the questions. Hit me up if you're interested in buying a deal off me or funding a deal, or don't reach out to JB with me unless we're going to do a lot of deals together, because I don't want to do one-offs. But yeah, my email is rosehartcapital@gmail.com. And you guys know the secret to unlocking a wealth through you. Spend less, earn more, and maximize returns in the difference. Bye, everyone. Mark says, oh, it just popped up. For sure they can be, Mark. What's your, I missed a question here, pal. This last question. No, I haven't found time to write an ebook. It's just not a priority for me. I don't know Loftia at all. It's only real estate on blockchain, so it must be a crypto combination. Just be careful with these yield notes and things. A lot of them are rug pulls, and you end up getting fucked in the end. So just be careful, guys. What will be your leverage? So if I'm going to be on leverage, it's going to be to hold a long and a short at the same time. So I'm net nothing. When you use leverage to be net nothing, you have a huge win, because Interactive Brokers is charging us prime minus, right? I think I'm paying like 2% interest in Interactive Brokers, whereas like on a mortgage on a house, I'm paying 5.5, 6. So it's half the price to borrow against stocks right now at Interactive Brokers than it is to borrow against real estate, which is, it's always been the case that it's cheaper to borrow against stocks, but it's a great opportunity, I think, if you can play your options contracts properly. Now, I take YOLO hardcore risks, right? Like I shorted the market 2-to-1 the whole way in July as it ripped up 20%, and I decimated my portfolio. And I've been short now while the market crashed again. And that was great. I've been riding it right up. I'm now outperforming the NASDAQ again. I'm going to start DCAing in because I know that I can't beat the NASDAQ long term. Anyway, I got to wrap this up. Is Burr still doable in London? Yes. Hey, no problem, William. I think lots of people can see me still. So Chris, I think the black screen thing is probably your internet. Numbers could be much better than in theory. Like there are people who are buying properties that are making much better cash flow and numbers than even what I'm telling you about, right? So there are variances along the rule, right? If wherever you're buying, it's like I met someone who had the same property in the same street that was doing 30,000 a year on Airbnb. Talked to another person, they're doing 70,000, the same street. In the same way, I've seen houses on the same street sell for 400, and the almost same square footage house sell for 490. Difference is staging, paint. Like ARV is again also subjective in marketing, right? So there's a huge range of what is a property worth, what does a property rent for, what would it do on Airbnb, and it's hard to even objective answer say, hey, this is what it's worth. Or to say, like, what rate would I get on this mortgage? It's like, well, some people are borrowing, super qualified borrowers are borrowing at 5% still right now, prime minus a little bit. Some borrowers are not so qualified, and they're paying 10% interest because they're not as qualified of a buyer. So there's so much variance that it's hard to say, one deal's the best or whatever, right? Like there's so much variance between deals, so there's so many factors and variables at play that it's hard to generalize. But in general, a lot of people make a lot of money in real estate, and it's a very stable asset class that's hard to lose money on. Anyway, thanks everyone for watching. We will see you next week, every week, live, 7 to 8 p.m.-ish Eastern Standard Time on this channel. You know where to find me, and on Instagram, Mike Rosehart, and on Facebook, Mike Rosehart. All right. Thanks, everyone. Bye.